really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right, EdgeFinder Webull.
Yeah.
Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right, EdgeFinder Webull.
Yeah.
Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Welcome back to another live stream. Let me share my screen here. Give me one moment. I'm just going to share this. Then we can do the intro music. You guys know I love doing the intro music. Hold on. Intro music coming in hot. Here it comes. Here it comes. Stay there. Ah. Yes. Intro music. Always get your morning started right. Okay, so what are we doing today? What's going on? Well, the stock market having a little bit of a slow start here. Well, not slow, but not a positive one. We see the NASDAQ actually down 1.5% here today. You've got the S&P 500 down 1% here today. I mean, one thing to notice is as we see this pullback, look at the, and I always like to do this, look at the best performer, the Dow Jones. Not really what we've been used to, right? And I've been saying this a lot recently. I know I keep making this point, but it is interesting to watch this shift in market favoritism. We see a proper flip on its head of the favoritism here. What I mean by that is the favorite recently has been the Russell, the Dow Jones, then you have the S&P, then you have the NASDAQ, right? The NASDAQ's not been the leader for the last week or so. And the last year or so, 2 years, NASDAQ's been, the winner. But we see some shifting here in the indices this morning. I'm probably going to get actually trailed out of my trade today on XLK, which would be fine. I've been in this trade since April. So, oh my gosh, I've been in this trade for a long time. I bought the XLK ETF during this dip in April. I was just mentioning to Frank just before jumping on the live stream that I'm very likely to get stopped out here of my XLK position. I'll show it to you. Actually, I'm definitely getting stopped out. Yeah. Where's my, I got to log into my brokerage. Hold on, guys. In case I don't want to dox myself, just stay right there for a second. I'm just going to do it off screen, just in case I don't want to show any personal information, which I definitely would have shown personal information now that I just did it. Okay, we are good to go. Okay, so here we go. XLK. So yeah, we're going to get stopped out. Market opens in 6 minutes, trailing out of the XLK position. And I'm not going to lie, it'll be a little sad to see it go. I've been in the tech sector for the last couple months. It's been a monster trade recently with semiconductors, flying high, and been putting in these higher highs and higher lows. But today, I was looking for this level of support to hold for the NASDAQ to keep pushing, and it seems like we might have lost our momentum there. So looking like we're going to get stopped out here in just a moment. You might say, well, Nick, why aren't you stopped out already? It's because I'm trading an ETF, and the trade will trigger on market open, which is in about 4 minutes. So in 4 minutes, I'll be taking out the trade. And that's going to mark the end of this. Well, let's see. How long have I been in this position? I've been in this position for 90 days. That is a 3-month long winner. It had to come to a close at some point, but I'd be lying if I didn't think or didn't hope that and think. I thought we would keep going, but I'd be lying if I said I didn't hope that it would have kept going. This thing has been a really, really strong performer. And when you say tech, Nick, what are you talking about? For people who may be a little confused by that, I'm talking about like technology companies or technology stocks, which make up things like Microsoft and NVIDIA, Apple, Broadcom, AMD, Texas Instruments, Micron, Salesforce, ServiceNow, Uber, Intuit. I mean, these are all companies that when you see me trade something like XLK, I'm just long basically all of these companies. And that has been a really good trade for me this year, but it looks like we might be seeing a little bit more of a rotation. We might also be seeing a little bit of a bigger pullback starting here, but we'll see. I mean, to be fair, going off of the track record of this year, this kind of move is a dip buying opportunity. This year has been so strong for stocks, and buying every little dip has been has rewarded traders substantially. That being said, am I buying the dip here today? No, I'm going to stand to the side. Like I said, I'm going to get trailed out of my position on the technology sector, and then I'm probably going to reset here and take a look at what do I really want to. What do I want to trade here? I'm still bullish on the stock market this year. I've come out and said several times, I am bullish on gold this year. I'm still in the gold trade. Gold trade has become an absolute beast. That trade is up 40K, which is a freaking crazy number. So I show you guys these sorts of trades. Remember that in order to capture that kind of return on a trade every once in a while, I also have to have periods where I lose 10K or I lose 15K or even lose 20K or not all at once, but like as a total drawdown, I might have to go through a losing streak in order to find this trade. So in this case, that's kind of what happened. I got chopped up a little bit here, but I was bullish over here and here and here. So I've been bullish like all year. And it's played out very nicely, but I've had to say I've only had winners would be unfair to my audience. I've definitely taken some losers. I've been early to this idea. So we're celebrating the continued push up in gold, but putting some context with it. It's important that you don't just, I find it really, really important as a person in this space that does have a following, just to keep it real and to show you guys the full picture. So we'll see, but the NASDAQ continues to sell off. You get the S&P. I mean, this is kind of the story here today. You're seeing the dollar index also break 104. This was big. So this is kind of a big deal. And actually, while my XLK position is probably going to get trailed out today, what's working out really well is we picked up the Australian dollar yesterday. That started out really well. Look at this entry, by the way. Gosh, I wish more of my entries looked like this. So yesterday we bought the Australian dollar right here came down to the 50% retracement and just perfectly bounced off that. Now, this trade might still end up being a loser. It's totally possible for that to happen if something shifts in the DXY. But you know, the Australian dollar off to a really nice start here with this trade. We'll see if that one can follow through. I picked that one up yesterday in the VIP room, and look at dollar Swiss. I mean, we've got just there it goes, guys. We just got taken out of the XLK position, so we will goodbye XLK. I'll miss you. It's a nice winner. We'll take it, and again, out of XLK. Entered that one back in April. That you guys, that's a surreal feeling. I mean, I held that trade for 3 months. That is a very long time for me to hold on to a trade. But look at that, XLK coming out the gate, still selling pressure here. Candle just opened up. Nasdaq continues to sell off 1.7%. And the question is, what am I looking at today? Well, this pullback, I gotta say, I am watching the Nasdaq, and we're awfully close to a point where I could potentially get long Nasdaq. I'm watching. So for you know, U.S. traders, I trade the Nasdaq by trading the Qs. So this is QQQ, which is an ETF that tracks the performance of the Nasdaq. If we see some follow through here today, and maybe some signs of bottoming out on the Nasdaq, I might be a buyer. I'm keeping an eye on it. I like the momentum. I think that the tech trade is not dead, even though I just got trailed out of my XLK. I think we might be due for a bit of a breather, right? Technology, I think, has taken a little bit of a break, but I still like the upside for the rest of this year. So I'm going to watch it close and see if I can get an entry on that. The Russell making a real strong push here. And today, maybe seeing a little bit of a pullback move. And if it gives me the chance, let me see. Do we have Russell as a setup? We do have the Russell as a setup. So I'll tell you what, I mean, this is probably where I am interested in most, is getting long the NAS on a pullback and the Russell on a pullback. So let's mark some pullbacks up. I mean, maybe we're starting to see a bit of a pullback setup here on the Russell. Russell, I will trade IWM. You can also trade Russell futures. And for some of the FX traders out there, if you watch the Russell, you can actually trade US 2000 as a symbol a lot of times. Alan says, Jesus, my ears. Was that loud? Let's try it again. Fair warning. Tell me if this is loud or if it's not loud enough. Yeah, anyways, I do like the Russell trade, but I probably won't get an entry anytime soon. I'll tell you that much, because the only pullback I see on this is like a 618, which is all the way down here. So I do really like the Russell. I'm probably just going to applaud Chris and Frank, who are both long the Russell. I'm going to hope that I don't get my pullback so that they can keep getting their wins, because Frank is long the Russell. Chris is long the Russell. So shout out to them. Not loud enough. Dylan, appreciate you.
Perfect candle.
We do have, you know, on a weekly chart, we do have a perfect candle.
Perfect candle.
Right? The Russell is killing it. And I got to say, I'm feeling a little FOMO with the Russell, because I've talked about the Russell for like months. And to be fair, I even was shorting the Russell during some portions of this. I took a lot of break even and tiny wins and some losses on the Russell. So I didn't make very much money shorting the Russell, but my concern was, look, small companies are going to struggle if interest rates stay higher for longer, but we've seen that story change in recent weeks. My bias has really changed in recent weeks, and growth seems like it might just be staying holding together, right? So anyways, I'm still also long TLT. This is another trade I'm watching here today. So this is a bond ETF. So TLT, a pretty good trade for me so far as well. I'm curious about Bitcoin. I saw some things. I don't know anything about this, but apparently the Vance gentleman that Trump chose as his VP, I don't know anything about this, but I did hear that I saw it on the news that people were saying that he's like, there's some good news in the crypto world because of his slot as the VP. I don't know why. Maybe somebody can share that, but yeah. I heard that, and then I looked at Bitcoin. I was like, yeah, well, it did like, rip higher here in the last week or so. And of course, Fox Business was calling this like this recent move, the Trump rally, right? The idea that Donald Trump may be elected, and I think just from just a purely why is that good for big tech idea. Well, as far as I'm concerned, I believe it is bringing the tax level for these giant corporations. The idea is like bring the corporation tax down to like 15% or something. Somebody might know more than I do on this, but if that is the case, cutting taxes for big businesses like that leads to more money in their pockets, which I know everybody is like, that's the last thing they need, more money. But here's one thing that you could consider about this is if you get big corporations, if Apple and Microsoft and these companies that hire a lot of people and also lead the technology innovation charge, the more money they have, the more money they have to also reinvest and to stay on top in terms of the tech trade. The last thing we want is for global opponents to catch up or outperform US business. We want to stay on the top. So if you're watching US indices, I think that there's a partial reason for why there was some rally on that is more money in their pocket means more money for reinvestment, more money for et cetera. I'm not saying that's necessarily what I think is right, because this company or this country is in a ginormous amount of debt, and then you have this question of like, well, how are we going to pay for that debt? And if you tax the businesses less, now you have where are you getting that tax revenue? So there's controversial stuff on that, but my point is the simple idea that maybe these big companies are going to get taxed less if you see a change in leadership has, at least in the recent times, shown some strength to the stock market. But now we see today a little bit of a pullback, right? We're seeing the NAS down 1.6%. People keep saying XRP. Let me just pull it up. I'm just curious. XRP is going crazy. Yeah, look at that. XRP today. Not something I ever watch or trade, but just pulled it up just because. Look at that. Gold is back to the all-time highs. We're very close. Yesterday we closed. Look at this. I mean, is that you guys know, regulars, you know where I'm going with this. Yesterday's candle was a
perfect candle. That green candle right there.
It was a perfect candle yesterday, right? Perfect closed right there at the top. Huge bullish momentum. We didn't get this wicking business, right? No like attempt to go higher and then falling down. We saw just crazy strength into the close. Very, very strong for gold. And you can see that, we've already started to follow through to the upside. I mean, gold is probably due for a pullback. I'll say that right now. But I don't know when. I mean, we might see a pullback after we see a shoot up to 2550, right? Or 2500. I don't know where the top of this is. And that's where I think, when you talk about gold, when it's moving in momentum, I don't know. And I'll be the first one to raise my hand and say, look, I don't know where this momentum ends. I'm not one to try and call the top for this gold move. Now, my actual strategy very much resembles that, because you'll notice that I don't have a take profit order on my gold trade. So at this point, my stop loss has been trailed from its initial risk point way down here all the way up to 24.18. So what I'm doing when I share a stop loss that I've trailed like this, the purpose of doing that, or the purpose of trailing my stop rather than taking profits, is because I could have taken profits here, or I could have taken profits here. These were levels that, looked like resistance to some degree. But I don't know when the gold market really gets moving, or the S&P or the Nasdaq, when these things get really moving, it's very, very difficult to call a reversal or a top or something like that. If you're just selling gold and you've been selling gold and you don't know, you're just fighting an uptrend, right? You're fighting momentum. This year has been crazy bullish for gold. This is a really good breakout year for gold. To sell gold in this year when we have rate cuts on the horizon, can you make money on the short side? Absolutely. I mean, if you're taking very tiny positions, and I'm talking about you have a big account and you're just bearish on a longer term view, you might have a strategy where you build positions on the short side. But I find that to be very difficult to be on the short side of a move like this, because again, who knows where the top is? You very well may see up days for a month straight from here. But again, I'm not calling for that. I'm not predicting that, because I think prediction is what gets you in trouble. For me, I took this entry. I was almost wrong on it. I was very close to getting stopped out on this trade. So my entry was kind of bad. It was kind of an early entry. Hindsight 2020, I should have just picked it up right at 2,300. I did trade it at 2,300, made some money on this move, and then I got trailed out. I decided to re-enter. My entry was kind of early, but the trade didn't matter in the end because the trade ripped higher. So now that we're breaking through the highs, again, the goal here is just to trail stops and to willfully admit that I don't know where gold goes from here. If it pulls back, that's fine. As long as it holds support, I'll stay in. But if it pulls back and it cannot hold support, it will be time to take profits and to celebrate the trade. So at this point, that is the goal. Are you really still holding this trade? Absolutely. Gold's been, here's my current P&L. It's been an insane trade. And I wish I had more of them, and I wish I could tell you that I knew what the market's going to do like this all the time. I absolutely do not, and it would be unjust of me to say otherwise. This trade has surprised me as it surprised many others. NASDAQ, look at that. NASDAQ down, fresh lows of the day here, pulling back and getting closer. I'm looking for possible entries here today. If we get down into this territory, I'm going to watch for a possible setup. Will I rejoin XLK or will I go QQQ? I'm probably going to go Qs, because now that I think that the broadening has happened a little bit more, I prefer a slightly more diversified index rather than just pure technology. Let's take a look at this heat map for a second. Okay, it's not updated yet. So let's do this really quick too. Category, I'm going to go take out the minor currency pairs for a moment. And I'm going to take out neutral readings. And this is what we're left with. Currently, these are setups on the EdgeFinder. I mean, it's kind of an everything rally setup right now. Look at this. Pretty much everything. Almost all indices on the EdgeFinder's tracking are getting bullish readings. Metals are getting bullish readings. Gold and silver. The Russell, Bitcoin, Aussie dollar, which I'm already long. Euro dollar, I'm not long, but I'd like to look at that one. So the ones that stick out to me, I'm looking for, I'm probably not going to get a pullback entry on the Russell, but I mentioned that earlier. So I'm probably going to look at the NAS, maybe the S&P. Dow Jones, we are getting a very bullish reading on the Dow. So let me look at what Dow is doing today. Look at this. Look at this behavioral change that we do see in front of us. Look at this, guys. This is crazy. The NASDAQ's down almost 2% on the day, and the Dow Jones Industrial Average is flat on the day. That is a wild difference in performance. You see the Russell down just 0.25% on the day, while the NASDAQ's down almost 2% on the day. You gotta just hand it to the Russell and the Dow. I mean, there is some serious heavy rotation going on right now in front of us. Now that rate cuts, and this, I would call it the rate cut rotation, really more so than, some people are calling it the Trump trade or whatever. I would call it just the rate cut rotation. Forget, I think the market is celebrating that it thinks that there's a stronger probability for a certain, for the election to go one way. Chris and I talked about that yesterday. Whether it was Trump or Biden, I think the market, if there was a decisive kind of like probabilities swing, the market would have liked it. Didn't matter who, didn't matter if it was Biden, didn't matter if it was Trump. The market would have liked either one. We actually saw that, right as it was kind of decided that, or became more clear that Biden was going to win the election last time around, the market rallied hard on that, right? People almost just like we're all sitting here, we're like, who's going to win? Who's going to win? I don't know. And people are debating it. Once you get some very decisive signal, the unknown is now behind you. And if there's one thing that we talk about frequently about market sentiment, is people dislike the stock market, the financial market dislikes the unknowns, and they like when things become known, right? So like when there's like attacks in the Middle East or something, but we don't know what's going on, that is usually more market moving than when we actually find out what's happening. Most of the time, that's how it goes. So when it comes to the election cycle here, people are, any sort of, okay, it looks like this is going to happen or that is going to happen. The market celebrates that, right? They just celebrate that, okay, now we're not scared about what's going to happen. So I do think that's a contributing factor here. But what I think is more important to this is it is, in my view, the rate cut rally. That is what a more appropriate thing to call this overall, the rate cut rally, because of the severe outperformance of the things that have been held down by high interest rates, right? Look at the Russell. The Russell has been held down by interest rates for years. And here we go. This is the rate cut rally, right? Because suddenly you have, okay, look, we're going to see rate cuts happening here in the United States. It does look like that is very much in the cards now. One rate cut is almost certain, like a 98% probability. I checked this morning that we're going to see our first interest rate cut by September. Now, these things have been wrong in the past before. If we see something change suddenly or drastically in the data, like inflation ticks up between now and then, or PMIs rocket higher, or, unemployment claims start to go down significantly, like a lot less people filing unemployment, and we see jobs hit. Like if you see a full reversal in the data, then that probability will probably change. But most likely, most indicators are pointing towards rate cuts. And that's kind of how we've scored the EdgeFinder. When we take a look at like the PMI data, when we take a look at GDP statistics or inflation data, the EdgeFinder is taking those pieces of information and assigning points, positive or negative, to each symbol or asset, right? So most things are pointing towards rate cuts. That's why we're seeing positive stuff for SPX, NAS, especially silver and gold, the Russell, right? So something to think about. Anyways, like I said, setups for me are finally kind of starting to come into play. I took a trade yesterday in the VIP room. I'm long the Australian dollar against the US dollar. And this entry was kind of crazy. I actually, to be fair, I was going to enter here, but I was busy at the time. So I got lucky on this entry because I was going to enter right here, but then price came down lower before I could actually get to my desk to place the trade. And so I got lucky on this entry, man. That was not my initial entry. My initial entry was going to be here. So I lucked out on the entry, but we came down, price tagged that level. And so far, the Australian dollar looks pretty strong against the dollar. I like the trade. The Australian central bank, the RBA, seems more on the hawkish side. Meanwhile, a lot of factors contributing towards a repricing of the dollar, meaning it's looking more likely that Fed interest rate cuts are coming, as we've just talked about. And so that has been really causing the dollar index to shoot lower here. I mean, look at the dollar index here today. This has been a real big reversal here for the dollar bulls. Really big swing. This ended up being a lower high here after all said and done. And I'll point out, I really thought, even though I was bearish on the dollar as this rally was kind of going on, I thought we would go up and retest 106.4. I kept saying that. I was like, I wouldn't be surprised if we see 106.4. I am, bearish on the dollar, but again, from a technical perspective, it looks really strong. But this was just a good example of, fundamentals are so important for this reason. You saw, we never even made it to 106.4, even though it looked like a clear path to 106.4, never made it up there. Sold off before then and has not even come close to retesting those levels. We've just seen really strong push lower. I'm very interested in the EdgeFinder. It's easy to use. It's super easy to use. The EdgeFinder is a data screener. It just takes a look at all your favorite charts. It looks through all of the GDP statistics, PMI numbers, retail sales figures, inflation statistics like CPI, jobs data, interest rates, and it gives points, right? One way or the other. And then it gives you a final total scores, and then it gives you bullish and bearish readings on all the different charts that you want to watch. We track everything on this thing. We have many different currency pairs on here. We do also have minor currency pairs. I just ticked them off. Check this out. So we have many different currency pairs, many different indices, commodities, etc. So if you'd like to try out the EdgeFinder, we'll drop a link here to where you can sign up for a 30-day trial. You can get some information by clicking this link, getting a trial there. And also, while we're on the topic here of things you can do, if you guys have not already joined our Discord group, it is currently 45% off right now. So inside of the Discord, I'll just show you this really quick. So inside of the group, you get access to all of the trades that we're taking. So I mentioned, like, I took these FX trades recently, the USD CHF and the Australian dollar trades that I'm in. I also trade gold in here and silver. I trade stocks and ETFs and indices. So we trade a lot of different things in here. We also have Frank. I know he's long gold right now, which is another trade that he's got going on. So we share all of our positions. If this is something that would be beneficial to you, if you'd like to see the trades that we're taking, we'll drop the link here in the chat. Once you click this message, this direct message link, you can chat directly with someone on our team who can get you information on that huge discount that we're doing. But also, they can answer any questions you might have. I know a lot of people are like, well, what do you trade? Or, do you trade? Do you swing trade? Do you day trade? If you have any questions about that, just feel free to chat with someone on our team. And if you just want the information for the discount, you can also just chat with us there. But again, we're doing a huge discount right now off the membership group. So if you're not already in there, there's your chance to join, get in the action, and come trade with us. We've been, truthfully, we've just been on fire recently. Like, I don't know how else to say it without, I know it comes across like I'm self-promoting and just arrogant about it, but genuinely, we have probably hit our best streak recently that we have had maybe ever. And things just keep going right. Now, I'm not naive enough to think that won't end. At some point, it will end. At some point, I'll have a losing streak and we'll have not a fun time, right? But recently, it's like everything has been really working out well. And I think we've hit it really correct with the rate cut story. That's been the theme. The rate cut trade that I keep talking about has been kind of the theme between everything that I'm trading, right? I mentioned I was long technology, gold, TLT, short the dollar. All of those things benefit from the same main catalyst, which has been the rate cut story. So the rate cut story has been really strong for us. So again, we're not always going to get it right, and I would never tell you that we are, because there are times when I'm wrong about things, and every trader is. But if you'd like to trade alongside us, if you like what you see on the channel, on the live streams, if you'd like to trade with us, take advantage, get that discount. We'll drop the link one more time where you can chat directly with our team to get access to the membership discounts that we're doing right now. Let's have a look at the euro. Euro is making a move here, trying to break out on the daily chart. We've just broken this resistance point. So I'd like to see this break a little bit more, just to really solidly show closure above. Thing I would like to see least would be like a long wick off the top here. That would not be as fun. So some strength above that would be good. The pound continues to push higher. I like this one on a pullback, but have not had a chance to get a pullback. The dollar yen actually making a drop lower here today. This is big. Actually, that's huge for dollar yen bears. Taking out that 158 level. And what that would tell me is I think there's a good chance we now test this 155 zone. Right, we had big support there previously. So I kind of like to me, the path of least resistance would be a push down to this zone here for the dollar yen. USD CHF, this is a trade I'm in currently. And my goodness, the dollar Swiss is moving lower here. Big thing, though, for me with the USD CHF would be, can we break this 88.40 level? So we're tagging a level. We've come all the way down here. You can see how price like magnetized down to this zone. Once it was clear we were going to see some sell-off on this one, we've come all the way down here to retest the lows. 88.41 current price. So for this one, I have to kind of make up a decision on what I'm going to do here, because we've got a lower high. I just trailed my stop yesterday. I want to. So what I usually look for when I'm trailing a stop is some sort of lower high, right? To put my stop behind it. I keep it really simple. I know that's like technical analysis 101, but I try and just keep it really simple with my stop trailing. So I'd like to see a lower high form. So I'll probably drop down to the 4-hour chart. And if we were to see like something like this, I could trail my stop further. But I'm going to keep holding this one loosely because I do think that the dollar has more downside. It may be due to have a bounce or a pullback at some point. But again, trying to time that has been really a dangerous game to play. Same thing with trying to call the top on gold. It's been a really dangerous game to play. A lot of people have taken the challenge and also taken the plunge, right? Unfortunately, gold for new traders, I say this frequently. When we see these big moves on gold or the NASDAQ or something like that, these are account blowing moves for a lot of new traders who are learning hard lessons, right? Because when stuff moves like this, what a lot of traders will do is they will get really bearish, thinking that it's gone too high, and they'll start shorting it and shorting it and shorting it and shorting it. And when it doesn't turn around and it keeps trending higher because things have fundamentally become more bullish, it can really blow some accounts. I've had my fair share of trying too many times to double down on losers or being on the wrong side of something and being stubborn with it. It's you have to be, I'm not saying you can't be counter trend or that you can't build positions, but you have to be very careful doing that sort of thing. I think that a lot of new traders try and like, no stop loss, just short something like this, and they just blow their accounts because their accounts are too small and their leverage is too high. Can you fade moves? Like, yes, absolutely. Like if you are, long Bitcoin, for example, like let's say you're super bullish long-term Bitcoin, you could have survived this crazy move lower. Only if you are not using a bunch of leverage and you take very small positions and built to trade. Yeah, it would have worked out in the end, but you'd have to accept, okay, we're going to have big drawdown. Like that's going to happen at some point. There's no question. So my point with sharing that is, can you add to losers? You can, if that is your sort of strategy, but make sure you have thoroughly back tested what you're doing and that your sizing should probably be 1/10 the size you think it should be. That would be my, from personal experience, when I talked about this trade a lot, the Euro Aussie in 2020 taught me a very, very valuable lesson about position sizing. You guys ready? Yes, I was short on this thing. And yes, it was agonizing because I was so wrong about it. I shorted this rip And at the time, it looked like, okay, yeah, this thing is probably a little overextended, and then volatility exploded in 2020. It reached highs that have not been seen since like 2008, like crazy, crazy volatility in the FX world. My position sizing was small, but what I thought was small was still not small enough. I didn't get blown up on this move, but I took on a serious drawdown during this time. And this is in one of my more kind of counter trend building positions approaches. I survived that move, but oh my gosh, was it painful. Because what I've learned about, if you're gonna, and we'll talk about this more in a moment, I think Chris might have something to say on this. Well, you can be counter trend, you can be willing to build positions on a fundamental or longer term basis, but my goodness, do you need to accept that your position sizing probably needs to be a lot smaller than you think it does to survive some of the crazy, crazy moves that can happen in the currency world and that can happen really in most markets. Anyways, we're going to be having Chris join the call in just a moment here, guys. So stay tuned. We will be right back with Chris just after this short break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about OANDA. OANDA is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out OANDA, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with Chris. What's up, man?
Happy Wednesday. What's happening?
Happy Wednesday. Hey, so Chris, I was just going on a rant about something. I wanted to get your input because I know we both kind of have experience on this. I've, back years ago, I actually interviewed you. It's crazy to think it's been like 2 years since we did this interview, but I interviewed you at one point and just asked you a little bit about like the FX world and how you kind of have a more longer term approach with a lot of stuff that you're looking at. My question for you, just going off of what I was just talking about, is when it comes to like building positions and being longer term focused in the FX, would you agree that your positioning size needs to be a lot smaller than you think it needs to be for a lot of people listening?
Very much so. I would say, I'll give you an example. My master account that I typically trade that's linked up to several $1 million, my master account at 50K, I'm trading micro lots. That's how small my trade size is.
Yep.
So I will take micro lots and build them into minis and build them into standards. My total exposure, like right now, my Swiss basket is around 2.5 standard lots across, six Swiss pairs. And that's on the master account. So I have a few clients that are, 1.5 times leverage. Most are mirroring my risk. So I start very, very small. But the reason I start small is also because I'm willing to add a lot of positions. If we have dips and pullbacks, I can show a chart here on Euro Swiss is a good example. So I'll just walk you through I've been in these trades for the last year. So I'm still waiting, but the nice thing is I've been getting paid for 1.5 years on positive swap. So it's okay. We're looking at about a 4% differential. So that's a nice little buffer. But basically when we had this level get tested, that was where I started trading. We had this trend line break. So when I went down a little bit lower, I was looking at, trying to buy another low right here that didn't fill, but we had an aggressive trend line break. So, my positions, and I'm going to estimate here, but I'm probably in a dozen positions or more on this Euro Swiss, starting here with some patience. Okay. And then getting a trend line break and then stacking some orders. I'm trying to take this thing all the way back up here towards 101. So I've stacked some orders. We had a pullback in here. So the orders are all over the place. It doesn't matter where all the individual orders are. My total position right now this was about a, let's say a 0.3 to 0.5% drawdown. Okay. So very manageable drawdown. Like nobody's going to freak out with a less than 1% drawdown, but as price is going up and I'm building positions. Now this one stung a little bit more. When we had this pullback here, I was probably in about a 2% drawdown. Okay. But again, if this goes higher, I'm looking at about a 5 to 6% gain to the upside. So I keep the trade sizes very small, so it never really worries me. And I also keep the trade sizes unique in different trade sizes so I can trade non-FIFO. In fact, I just saw you ran an ad with OANDA. That's one of the reasons I've been at the OANDA for so long. I just talked with Tasty FX this week, and they're doing the same thing. So if you have a unique trade size as a U.S. trader, they will also allow you to trade non-FIFO.
Interesting. Yeah, that's really cool. And that's the thing is, you know, for the FX traders out there, it's just whatever you're trading, actually, it doesn't even have to be just FX. Just understand that, you know, I make this point periodically. When you see an expansion in the VIX or a plummet in the VIX, strategies that were working for you may stop working. This is why no strategy. I like to break it down really like most strategies, Chris, work well in a high VIX environment or a low VIX environment, but very few work in both perfectly, right? Because, you know, when you get these high VIX environments, even if you're seeing this move right in the VIX, your super easy trade of the last few years, which has been buy every single dip imaginable, doesn't work so well because you're seeing the markets not just dip, but trend aggressively lower for months on end. But then if you're trading that same strategy now, a lot of people, I always make this warning, like a lot of people think that now you just buy stocks every time they're down even 1%, and they will simply never go down anymore. And then you'll make money because that's been what, you know, people psychologically get used to the environment they're in. But you know, we've been at a very low VIX for a long time, Chris, and I'm not bearish on stocks. I'm even thinking about taking a little position on the NASDAQ soon. But, you know, I also am fully aware that of the environment that we're in. We're at a Super Bowl market. You trade it till it is no longer there, but you got to recognize when it's ending too.
That's for sure. The VIX is one thing that, I mean, I don't really know why we had a massive gap lower today. Did I miss something?
I don't either.
Yeah, it's like there was no news this morning that was major U.S. news.
There weren't any big earnings, right? There wasn't any semis.
No, I mean it's mostly today. From what I see, a lot of the earnings are today. Like, or I'm sorry, tomorrow's the ones that I'm paying attention to.
Well, look at semis. SMH is down 5%, Chris. I mean,
that's
if we take a look at the sectors to try and dissect this, I mean, it is really tech and semis that are down here today. Everything else is not nearly as beat up.
Well, if you go to, I know we like SMH, we like SOXX. Those are two semiconductor plays. So I mean, just on the initial gap, this is down, 3.6, currently trading 5%. I mean, I just think this rotation is violent. I mean, this is a violent, aggressive rotation away from Mag 7, possibly a little bit short term out away from semiconductors. But I mean, look at this thing. This is a semiconductor ETF that's down about 5%. I mean, even your Mag 7s, your darlings.
I got your heat map here, Chris. Check this out.
Yeah.
Just while you're going. I mean, there's your day. Does this not feel very familiar to CPI day? I mean, this is the same thing, but it surprises me because I did not expect this rotation to be. It seems like it's a little bit, excuse the weird word, but cannibalistic. Like it's almost eating into the big ones, and just it's kind of weird how that surprised me. I didn't think that would have continued past CPI day, but maybe we're just getting another day. To your point, that it's just this, maybe there's more violence to this broadening out than simply just, oh, let's all hold hands and rally. Maybe it's, no, I'm going to smack your hand and I'm going to take your food from you.
Yeah. I have a couple of screenshots here. This is July 11th, where we actually did have the CPI day. And then I believe this screenshot was, if this wasn't yesterday, this would have been Monday, when it was more of the same thing. So I just want you to notice like the similarities of, look what's red compared to green. Look what's red compared to green. I mean, this rotation and the same thing you just showed us, it's like very eerily similar that, man, it is an aggressive rotation outside of what stocks have carried this market. are no longer doing it. So in a positive way, it's refreshing to see that it's not just a narrow rally, but you also wonder, like, well, is this a bit of a house of cards situation where clearly if your largest market cap stocks are down, the overall indexes can't necessarily perform well. If you don't have the top
something else
10%
for you.
performing well,
Yeah.
What's that?
I got something else for you just to add.
Yeah,
Thanks
sure.
to Lee in the chat. Lee mentioned that Trump said something about semiconductors, which was not necessarily constructive. So just pulled this up just because I wanted to see. So Trump says Taiwan should pay for defense, sending TSMC stock down. I noticed that it was TSM this morning. I pulled that up right as I woke up. I was like, what's going on? Did something report? I know Taiwan semi, but why I asked about earnings was because I looked at it this morning and Taiwan's earnings are tomorrow. So I was like, oh, it must be an earnings thing, but it wasn't an earning thing. It was Trump saying Taiwan should pay the U.S. for defense. TSM down, semiconductors slump amid export curb control fears. Trump's Taiwan comments. I mean, we saw this in Chris. We saw this in 2018, the trade war and the NATO stuff. Trump he doesn't. He's aggressive on that stuff. He has, his strong opinions. Say what you like or dislike about the man, but he definitely, he has his very opinionated approaches to everything. And so when it comes to Taiwan, which is a big, fab producer for NVIDIA, like these are key names. So I don't know. What are your thoughts on that?
Well, I mean, you're talking about the likely president. And so now everything he says is going to be a soundbite that can do exactly this.
Back to, did I not miss this at all? Twitter. Well, remember when Twitter's like his Twitter handle was just like the market feed all the time? I did not like that, to be honest.
There were algos, or there were actually like trade services that were built around his tweets. They built derivatives around his tweets to see how they affected the market. Silly stuff.
Crazy. That's crazy.
But yeah, so I mean, when you're rocking one of the best performing sectors, everything else is going to take notice. And so this is where the high concentration makes things a little scary, right? So I mean, we're looking at the Russell today. It's like we're down 0.4%. It's not nearly as bad. I mean, the Qs are down 2.35%, SPY down 1.2. The Dow hanging in there. But actually,
the Dow is up
still
today.
Green on today, but the Dow's up, so we gapped lower, but we're still up.
Dow's up on an 8% gain on the VIX today as well. Gold's flat. Silver is slightly lower. Lower, 2.5% lower. Oil is up today. I mean, that seems like a good old-fashioned geopolitics move now that we're looking at it.
It really does.
And
that's one thing that's going to be uncertain too. It's, Trump's likely going to be president. How far does he take tariffs, trade war, deglobalization? I don't know. And that's the one thing. I mean, I don't know how many people enjoyed 2016 to 2020 from a political sense. I certainly didn't. But if we're right back in that same wheelhouse with everything is going to be on Twitter, everything's going to be out in the open. It's going to be just in your face comments. And sometimes
maybe
it makes
you just go long VIX. Maybe that's just a long VIX story right there. Like if there's one thing I remember during that time,
I'm good. I'm long VIX now. I'm like, so right now, I mean, I'm long at 1050 through an August hedge. But I'm not necessarily looking to carry that long term, but I do have one that's very inexpensive. My VIX position here. So I've got a 1050 call out to August 21st that if this thing rips up here towards like $16, $17, I'll probably just take the profit on that one. But the one that could be very attractive would be if we get up to like $18, $19, $20 on the VIX, my out of the money October 16th at $20. I paid $1.60. If we get to that $20 at the money and we have some time left in that trade, that could be paying $5, $6, $7. So I have maybe let's say a 50 to 100% upside on one trade that's in the money, and then maybe a 400 to 500% upside on the other one. So I am definitely again another position of if the market's going to drop a little bit because it's overextended, I'm long the VIX. If the market's going to be overextended, one thing I thought about coming in today's session, Nick, is could I take just a few minutes and just share something with, I know a lot of people come in here and they talk gold, they want to see the NASDAQ, they want to see currency pairs. I just want to take like 5 minutes and just give a very simple overview of if I could help traders understand options, and it's not just bear with me, I'm saying like options on anything, because I can trade options on gold. When I talked to the CEO of Tasty FX this week, Pete Molmat, and I saw him in Chicago this last weekend. I said something that caught his attention. I was like, I think the futures trading is easier than Forex. And he's like, oh, you think futures is easier than Forex? I'm like, yes, because you can trade options around it. I've been a Forex trader for 15 years, man.
Yeah.
And I can say that the way I've made the most money in Forex is by trading super, super small, using almost no leverage, and being extremely patient with my trades to play out. And futures, I can have defined risk. I can be dead wrong and know that I'm only going to risk a certain amount of money. So as an example, what's been, you want to talk gold for a second? Is that an easy one to talk options on gold?
Let's do gold, and then I'll give you the floor to kind of go through as much as you want with it. So you're in charge. So gold, gold breaking through the highs, a little bit of rejection here just in the last few minutes, but go on. What do you want to get into with gold? So you're talking options on gold too?
Yes. So to do the analysis, I mean, I'm looking at XAU. If you want to go to GC, that's gold futures. All right. You'll see how this all kind of plays out from doing some analysis. Now, I did most of my work on XAU. You can see here it's very similar, but what was happening here, there's a couple ways to add some exposure. Okay. So if we talk about XAU USD, and I'm watching these prices. So when we started to pull back here towards like 2,300, all I needed to do with my trade was, okay, so we had this big rip to the upside, we pull back, up to the upside, pull back, right here at support. Now, we'll be a little technical here. I think traders can see this and say that's a good opportunity to buy low. You're absolutely right. Now, we can buy low and you can get this run and you're crushing it to the upside, but how much does it cost to buy gold? Well, if you're buying GLD, you're buying that around 212. Pfizer crossing $30. I'm excited because I've been in that trade for a long time. Gold at, we'll say 2,900. GLD was around 212. Okay. If you wanted to buy 100 shares, and when you participate in gold, Nick, are you trading GLD mostly?
I trade GLD. Yeah.
Or are you trading XAU? GLD. Okay.
GLD.
So let's say you bought it at 212. All right. So we're at 100 shares. Okay. Now, if you wanted to buy 100 shares to control options and sell covered calls and lower your cost basis, 100 shares is going to cost you $21,000 cash. Now, there's margin accounts, which would cut that in half. So you're looking at about $10,000, about $10,000, $11,000. You could have portfolio margin, which would give you maybe another, 3-to-1 leverage. But again, you're kind of trading on margin. And for stocks, that's okay, but you can't trade on margin with options. You can't trade on margin with futures. Okay. They're already leveraged as it is. There's no margin on that. So you can't borrow against them. Now, not a lot of traders that I know that are starting out, figuring things out in the markets for, maybe the first 0 to 5 years of trading, taking a $21,000 position is a pretty big stake in something. And granted, if gold was going to drop by 3 to 5%, you're down 3 to 5%. That's a decent drawdown on a position, right? So my point is, if I bought GLD, or here's another way to do it. So GLD at 212, okay? If I looked at a put, I could sell a 212 put, okay? And I could do like a 212 by, let's say, 210. That's only a $2 wide spread. All right. Now, if I did this, let's say it was at the money, I'll just give you a rough estimate of what this thing was going to do. So we'll go at the money here and just bear with me on some of the numbers. But on GLD, if I put a trade on, we're going to go out and say, okay, 65 days from now, GLD is going to be higher. So if I sell a put here and I buy a put here, okay, I could collect on about a $2 spread. I could collect $1. Now, that's only going to set me back with about $100 of buying power. Okay, no big deal. And rather than putting up $21,000, how much money do you want to make on this? All right, gold, GLD has been up from 213 to 228. So that's a $15 move, right? If we have a $15 move on gold, we're up $1,500 and everyone's happy. But as a return on investment, okay, $21,200, I'm up about 7% in my position.
Yep.
If I bought the shares and I'm up $1,500, I'm celebrating that, but I'm up 7%. Okay. If I take a trade here and I get $1 credit and I maintain that $1 credit, I risk $1, I make $1. That's a 100% gain, right?
Yep.
Like if I'm going to risk $1, make $1, it's a 100% gain in that position. And all it has to do is stay above my price. So time works in my favor, direction works in my favor. Your return on capital, return on margin is way higher, and it's not that hard of a trade. And if it goes to the downside, your defined risk is your $1. This gold could go to zero, Nick, and you risk $1.
Yep.
So
Exactly.
I hope traders understand that. I've traded Forex for a long time. I've been in stocks for a long time. When you get a little understanding and put, maybe 2-3 strategies in your quiver for trading options, your dynamic ability to trade all directions, up, down, sideways, and to define your risk. The reason I moved my entire portfolio into trading stocks and options and futures and options was because, I'm up about 16-70% year to date. Like I'm kind of matching the benchmarks with very low risk. This is probably one of my best years as far as risk adjusted returns. My biggest drawdown was back in April. I was down about 4%, so about half what the market was. And to the upside, I've quadrupled that. So that risk adjusted return is pretty favorable. And I'm doing that with barely owning any stock. That's another thing is you can still leverage your positions, make, as good of profit. Do we miss out? Is always perfect? No, there's always, trade-offs and pros and cons to everything we're doing in trading. But I hope that traders understand that if you're interested in learning how to trade options, you can trade options on stocks, you can trade options on futures, you can trade options on crypto, you can trade options. And right now I can trade options on currencies. As an example, the Japanese yen. So thoughts on the Japanese yen for right now. I took a long, hard look at everything this morning. The futures market, there's a /6J, which is the Japanese yen futures. Now, I'm not trading this one right now. You and I've talked about this in the show. I'm trading FXY. But if I'm looking at a futures contract right here, here's an easy way to trade this, okay? If you're in Forex, you are begging for the Japanese yen to get stronger. And you hope that it does, right? But what if it doesn't? What if all this is just another kind of fake round of strength and we continue on with this carry trade and risk appetite? I still think this. If the Nikkei wants to make higher highs, the Japanese yen is going to have to get weaker still. If it's not, and all of a sudden at, the Fed at 5.25% or dropping to maybe 5%, is that the reason that this carry trade completely unravels? Not necessarily. You're still talking about a differential of like 4.5 to 5%. I mean, I don't see the BOJ raising rates necessarily. So long story short is this. If I put a futures trade on the 6J right now, I could go down here. This trade's been, popping up here since about 0.006. I think the futures feed is weird on this one, but I can still find the level. So 0.0062. All right. 0.0062. If I want to go out and say, all right, Nick, over the next, let's go to March of 2025. I'm going to go way out there in the distance to say, okay, if this level is going to be the low, let's see if we can get paid to find this direction. So the low here is around 0.0062 and 0.0062 right there. Okay. Now, right now, here's, everybody see my numbers here. So right now I could put on a trade that would cost me, okay, about $1,500 to take this trade. Now, if I am right on that trade, that $1,500 of buying power pays me $587. That's a pretty good return on your buying power. So as far as what I have to put up on the trade now, you might see that, max loss of negative 76,000. That's where I'm going to talk about this as an option. So if I took up 587 divided by 1508, my return on capital would be about 39%. If you look at a Forex trade, the Japanese yen is not going to move 38%. We might have like a 5% move in the index, or we might have a 10% move is a massive move of the Japanese yen. But let me go ahead and define this risk. If I take this trade and I'm going to take this buying power even lower. I'm just going to put this in as a spread right there. Okay. So right now I can take this where my buying power is $200 and I get $100 and I get 50% return on my buy power. Now, the nice thing here is now my loss, the Japanese yen can go to zero. The Bank of Japan can blow up and lose everything. This instrument is going to cost me a max loss of about $500.
Yep. You can really define your risk. And that's another thing too, about like when it comes to options in the equities world too, if like you trade individual stocks, like the tail end risk of like any individual stock is very high, especially when you get outside of like the top 10 biggest companies. I mean, the probability of like, is Netflix going to go to zero overnight? No, but it's not likely, but it's possible. They could come down 30% one morning. And with options, if you have like defined risk to some degree, suddenly you can't lose 30% of your entire account, depending on what you've set it up. It really is. I always like to say that it really is in the name. Options give you so much flexibility to whatever you really want to do with particular markets. Speaking of Netflix, just while we're on the subject, we got earnings tomorrow, right?
Yep, we sure do. Did you see what Frank and I talked about yesterday? How we priced it out?
I heard a little bit. Yeah.
Okay.
So you guys are looking to, go for it.
Well, so I'm trying to keep it fairly cost effective. We've already had a pretty decent move. I mean, I'm essentially centered around 560, but I have a bull put spread to the upside and a bear call spread to the downside. These are both considered in the money. All that means is I'm only risking on this trade about $1.25 per side. So if I'm right on one side, I make $3.75. Okay. And if I lose on one side, I lose $1.25. So my net profit is $2.50. So that's what I can max out here by next Friday. If we have a big earnings report, positively or negatively, if it's positive and we rip back up here, hopefully we're back above this 715, 720 zone. And, realistically, the trade is going to be this. I collected 750 credit. If this is trading for, let's say, a $6 debit or less, I'm just going to take the profit. I'm looking at a percentage move where if I get this credit to be allowing me to pay. So rather than trying to hang on to my maximum of 250 by winning one side, losing the other side, if I just have $1.25, I'll take, half the max profit and move on. Sure. So it doesn't cost me a lot of money on the trade. And, I'm hoping, look, this has been a nice rotation. It's been a great year thus far to have like a pretty eerily similar run like we had back in 2017 and 2019 with really good starts to the year. If earnings disappoints this next month or so, things are going to get very interesting. I think the markets have the right runway to think, okay, Fed's cutting rates. We've been waiting for so long for this. There's this rotation into small cap and there's rotation into small cap growth. I think that's going to be mostly the tone as opposed to value. I don't know if there's the growth to value might never be the same because
it could be a longer term.
We've proven growth just completely beats the pants off the market when it's time, when it's appropriate, when the momentum's behind growth. It is such a tailwind on growth. It's ridiculous.
That's true. Well, Chris, I'm going to leave you. I got to jump on this podcast really quick, so I'm going to give you the show for a little bit. You got the controls, and enjoy it. Thanks for the conversation, and we'll see you back on the next one, guys. Before I step out, everyone make sure to go follow Chris on his socials. We'll drop the link to his YouTube channel. He's also on Twitter. You can find him at Real Chris Pulver. And Chris, you got the show. Enjoy it, man.
All right, thanks, Nick.
Thanks.
All right, everybody. I see some requests coming in. Can we look at gold? Yes. Anything else? S&P 500. So here's what I'll do. I'll typically pop in here my Pulver report, kind of my top-down weather report. Let's take a look at everything. So SPY is down to 558. Okay. The floor that I've been talking about for the last couple of weeks, that floors continue to move up higher and higher. Right now, let's just zoom out, see the last couple of weeks of price action. So a couple of things that I have running right now. I have a deep in the money bear call spread right around here that expires on Friday. I doubt I'm going to get that thing to pay me. I'll take a look at it, but I doubt it. I'm only risking 50 cents, by the way. It was a $4.50 credit on a $5 spread. So probability of profit is very low, but risk is also extremely small. The other trade that I have is I have a 550 by 500 on the SPY which is one part of my iron condor. All that is I basically traded mechanically, super high probability that by this expiration on the 19th, the SPY would be below 550, but yet it'd be above 480. And so, and if you're familiar with the options trades, they have really silly strategy names. But an iron condor is this: I'm selling up here and I'm buying down here, and if price stays in the middle, I get paid and I get to keep all that premium that I sold. Okay. So that's the strategy. I went out about 30 to 45 days, and that leg happens to be 555. That's the upside, and 550 is the downside. So in a way, in a cheeky little way, I'm hoping that this SPY wants to fall into that window. I don't want the assignment, but I have the bull put side is profitable, and so if we can fall back below 555 or get into the middle of that zone, I can probably close that out for a net profit. I'm also hedged like crazy to the downside. I'm long the VIX. I have some hedges where I have trades that do this. So regardless of what happens, I mean, what I would like to see is something that is, I'm still getting a lack of follow through on my gamma squeeze levels, my institutional levels right now. So, you know, the one thing I see right now is 562. We haven't hit it, you know, today, this morning during opening bell. But I'm not ready to take a directional trade because even to the downside, I don't see the evidence to suggest that we have all these reasons to go lower. Now, these could obviously fill up later in the day. The market could break out and make some fresh lows, and this starts to light up at 555 and 553, and maybe we see those sell-offs by today or tomorrow. But if this remains very quiet on my gamma squeeze levels, I'm just chillaxing right now. I centered a short-term trade around 560, and right now on the SPX we are trading at when I say 560, I meant like 5,600, and I'm still, you know, in profit on that trade. So let me see what that one's looking at right now. Let me go to the SPX. There we go, and it would have been a trade for today. Yep. So right now, the trade is, if I show you the parameters here, this is current price. Okay, that's my sell call. That's my sell put. It's right in the middle. I've already seen about $1 worth of decay. So the trade is profitable. I'm going to make a note of this in my trade tracker. It was a $2.60 credit. All I was looking for was a 15% take profit. That's a nice little win, and it's actually up about, you know, 80 cents instead of the 40 cents that I needed. So I'm not going to call it a full winner, but trading for $1.80 debit by 10:32 a.m. Eastern time. So within the first hour of trading, this thing is already up well past its profit target. So a little short-term action there, which is not too shabby. Let's go here. SPX. Okay, so SPX, and let's just talk about where we're at on these instruments. So, you know, we're getting some gaps. So what you see in the background is this is the candle for the week. So the red means we have a red candle on the week thus far. Now, there is an interesting probability for this week. Okay, we did make all-time highs Monday. Okay, we made all-time highs yesterday. Okay, we're dropping below that, and the probability would be that we do not take out the low from last week. If we take out the previous week's high, we typically do not take out the week's low at the same time. Okay, so I still think that, you know, we're red on the week. We might slide a little bit, maybe come in and test, but not necessarily breach the lows. But what this does look like from a price action standpoint, I mean, look at our SPY. Okay, I mean, we're going to have a noticeable gap right there that could be filled. But if we start to break, and this is the floor that I've been talking about the last couple of weeks, my floor was here at 542. Now my floor is here around 554. So, Frank, I see you joined in. We're just talking about some technicals here, man.
Hey, Chris, I have something to share when you're done.
Okay,
cool.
Just let me get through this SPY and SPX. So if we look at these levels, you can see my chart alarms. I mean, if the SPX breaks below this low, there is some potential damage on at least a correction. Now, does this put in like the top? I don't think so. I mean, I think the market has enough, you know, energy and momentum to rotate, but still offer some potential upside in a broader market. But it does get a little scarier if we, break this low, break this inner trend line, and maybe gravitate towards another structural low. I mean, I'd say the damage, in my opinion, is going to be if we break this area with the bears. That looks a lot worse off to me. If we have a pullback of, okay, we come back and test this level and we bounce, or we come back and test the trend line and we bounce, that doesn't really do any, technical or structural damage to the SPX. But if we break below 54.50, that is where things get a little bit nastier. That type of pullback would be pretty ugly, considering we've had such a good reason to kind of justify an additional rally. That would be a 7% correction. There's been, I've seen calls out there as deep as 10% before the end of the year for a pullback, and maybe that's it. But why the 10% pullback? I don't know. Maybe it's part of that whole rotation that we can't have the narrow concentration. Things need to broaden out a little bit. But that would scare people. I think if we had a 7 to 10% correction and somehow that finished at all-time highs for the year, that's going to be a lot of volatility. So one thing that we can benefit from is being long the VIX, which I am. So what's up, dude?
Hey, I wanted to share something about interest rates and what happened with the stock market back in 2008.
Okay.
So let me share my screen really quick. I was trying to highlight some stuff. So let me find September. So on the month where we saw a significant decline was where it broke these lows in 2007. Let's see, that was August 2007. So it took basically a whole year before that September 2008 crash.
Okay.
Here is what happens when the trend started lower. I'm going to pull up just the Qs. I highlighted this. So this was September of 2008. So right here, we got the Qs declining. SPY did the same thing on the same month, broke to lower lows, and then it continued to trend lower. However, what we saw on this month for small caps was a kind of like what's happening now, or it's nothing's the exact same pattern, but you know how they say history doesn't necessarily repeat itself, but it can rhyme or something.
Yep.
So there was, if you look at this wick, there was this sort of a catch-up trade like we're seeing now. So the small caps outperformed. It actually made an all-time high in 2008 in September, only to come all the way back to. So maybe the sign of small caps rallying, if it comes back and hits the highs or breaks new highs at some point while the market continues to drop, I'm wondering if this is like an indication that this is the lagging index. This is a lagging move. So if it touches all-time highs for small caps while everything is still trending lower, I'm wondering if that's going to be a similar situation for us in this year or not. Just because we're coming back to our all-time highs from 2021, so November. So if we come back up here, I mean, we could hit overextended once again, but I mean, do you see what I'm getting at here?
I do.
Okay.
Yeah.
It's
that is my small cap target. I mean, look, as much as I'd like to say this market's going to blow through the tops and, the Russell catches up and breaks all-time highs and rips to all-time highs and keeps going and brings everything with it, that's usually not the case. Usually if the Russell's ripping the way that it is, if it's disconnected from the rally of the SPY or the Qs, we're probably not going to see everything go up higher. I think this is, the way this has been moving, this is an aggressive catch-up trade that I am targeting these highs and I am out after that. So if we get within, 240 is not the all-time high. It's like 244. If we get to 240, dude, I'm probably closing out these trades and I'm moving on.
Yeah.
You know, I mean, I just think it's a good time to be this. Look, there's a couple things that I'm generating some extra alpha in my portfolio. Small caps by being dormant, and now all of a sudden this is ripping in a big way, and my directional plays are starting to pay out. Right now, if we're doing this with this type of weird rotation where the SPYs are down, Qs are down, and semiconductors are down, maybe the VIX rips up and maybe the VIX taps 20 for a second, which is good for a little hedge. But if everything is okay, the S&P was at highs, the NASDAQ at highs, the Dow was lagging, the Russell was lagging. Now all of a sudden you got the Dow up, the Russell up, the NASDAQ and the SPYs have taken a breather. This catch-up trade to me is just about as good as, okay, let's justify a rip to all-time highs or testing all-time highs. And from there, broad market is now teetering on bull market or bear market. I mean, I could see a top, right? I mean, look, you've got people that have talked about a recession since 2022. We haven't had one. A lot of things. I mean, what's so tricky about these markets is sometimes stuff is happening in the moment, and other times things are happening way in the future that the market's just pricing in now. It doesn't take much, Frank, to price in that, okay, we have possibly Trump as president and we have rate cuts coming. The market rips and runs, and maybe it's 1 month of that, okay? But then after that, the market checks the box and says, okay, we just priced it in. Now let's wait for some news, you know? And so I think that's what's going to be interesting right now. It's like the Russell, if it keeps going, look, it's nice to see that it's pausing today, but I still want to see the Russell go higher. You know, I want to see small caps go higher because they have been so crappy all year. And so this feels a lot like what we had back in November, December of last year. It's just not the same seasonality. You know, November, December last year, it's way easier to be bullish and just say, okay, by the end of the year, let's just ride this thing as long as we can. But for this particular move, it's July, dude. Like July to August. August in a Forex market is a transition month. There's typically tops and bottoms in August. I am wondering, you know, right now with the way the dollar's positioning, I mean, the dollar has been hit hard the last couple of weeks, especially. I told traders this morning in my room, you know, I feel bad that we missed this move on the dollar, but not every dollar cross was setting up solid. So I like dollar weakness as long as we can keep clearing these lows, but I wouldn't be surprised. I mean, look at today's currency strength. The dollar is sitting at support. We have the JPY stronger, the Swiss stronger, the dollar's nowhere to be seen. But if we start to get the dollar to tick up with the Swiss and the yen, we're getting risk-off currency flows, which is probably not a good thing for the stock market. Yeah. So, I mean, I think you're onto something with the small cap catch-up trade could be so fast that target might just be the highs. If it gets to the highs, it hits that box and it says, congratulations, small caps, you no longer suck. But now you can't sustain the rally because everything else has been crumbling around it.
Yeah, I think that there could be a misconception of, so these things like the RSP, the equal weighted index, and the small caps IWM are up today, or they've been up overall while the S&P and the NASDAQ fall.
Right.
So this sort of catch-up trade that's happening is like a sign of relief. This is kind of how I felt yesterday, that maybe this is a good sign that we're not going to be top heavy anymore. But after looking at what happened in the last major crash, which was 2008, because 2020 was something else. It was just a different scenario.
Sure.
The small caps ran incredibly high, only to pull back immediately. So
yeah.
If we're seeing everything catch back up, how sustainable is it? Especially when yields are dropping like a rock, which is the same thing that happened in 2008. From 2007 to 2008 is when yields were just crumbling. So, and that was the 2-year. I didn't really look at the 10 or the 20 or anything like that. But I'm wondering, so we could set maybe a target for IWM for the small caps to hit like 240, 243 or whatever.
Yep.
And price it out. See if that's like more so an end of year type of deal, or maybe even to September when the rate cut is supposed to happen.
Mm-hmm.
And I guess go from there, because I own small caps in my Roth, and they've been doing really great, but I don't want to hold it if I think we're going to come into the same problem that we saw, back in '08. So
Sure.
uh, I'm just I'm wondering if this catch-up trade is balancing out the market and saying, okay, we're no longer in the Fab Three. We're going to see every company doing well. But now, if you just look at a market heat map, Nvidia is down like 4% again today or something.
Yep.
Um, so if we have the big names crashing, like if this trend continues and they continue to drop further and further each month, and small caps still are doing decent, is it sustainable? Is it going to balance things out, or is this the spark of some sort of major correction? And I guess it depends on if I guess IWM has a giant rally or not. Like if it moves as fast as it does to the upside, maybe that's a sign. But if it's a slow tick, then I'm not really sure.
So would you rather see Russell move as quickly as possible? Because it's already up, from the rip last week to now, it's up over 10%. I mean, we've had an incredible run for the last 2 weeks on Russell. Look, I think it's nice to pause and then let's see if it can continue to rip. Like I said, it look, well before this happened last week to this week, it's been the same heat map. Mag 7 down, small cap in, 70+% of stocks above the 50 and the 200 moving averages now. Like, buy zones are back intact. But we also know that when the Russell wants to move, and it's been, just lagging all year, it's mustered up 1% gain for the entire year. Now it's up 11%. I mean, the Russell, think about this. The S&P is up 18%. The Q's are up, 24 to 25%. The Russell doesn't necessarily have to stretch and be like, oh my gosh, it's up 30, 40%. The Russell might hit 15%, right? Maybe it just catches up. Maybe it's 15 to 18%. Maybe it's 20%, and then it peaks. So, I think we need to be realistic with where those percentage targets can go. Because if the Russell catches up and we hit 17, 18% or 20%, I'd say that's good enough for like a ridiculously fast rotation, but now it's caught up. And now we can figure out where the health of the market really lies. Because as we've seen in typical bull markets that are healthy and broad, a healthy bull market, everything goes higher, right? Is it the high tide or the rising tide like raises all ships? I mean, if everything is looking good, the SPY can drift higher, the Qs can drift higher, the DIA, the IWM can drift higher. Like, all these can be up, and that's a healthy, broader bull market. It hasn't been that way. It's been narrow SPY, narrow Qs. Dow's been lagging. When the Dow gave a lot of their gains back, they were only up 4%. Now they're up to all-time highs again. So for the year, so if you see on my chart here, JNK, this is one thing that's going to represent, if you want to start to see, dents and cracks in the markets, to me, and this is high yield bonds. So it's junk, but it's high yield bonds, because this is where, when you have tight credit spreads, this means that there's typically risk on trading. Okay. So if we look back at when we've had some really nasty periods in the market, 2020, 2022, what happens to JNK? It falls off a cliff. Okay. So as we are sitting here, it made me look at it again this morning, because you're talking about, like, if the VIX is going to be up, if the Russell is going to hit highs and peak. If this is starting to crumble lower, then I would say we might want to be a little bit more hedged. We might want to be, maybe even tilted a little bit more bearish. But I don't see that right now. I see right now we've got some pretty good structure in here. If this keeps going higher, that's probably an okay thing, right? But what I also wonder is, from these levels here, I don't know how to really put this together as far as, like, does that mean that JNK comes all the way back up here before we hit a top again? I don't know. Because we had, a low here in 2019. When the market dropped in 2018, look, we had a 20% collapse in the market late 2018, and it was reflected here in JNK. So you can go back to all of our biggest sell-offs in the market, and you can see that JNK has dropped. So right now, we're not dropping. Right now, there's no trajectory to the downside. Therefore, I'm not necessarily thinking, okay, this is a bear market. right? I think a correction, I think a pullback, I think a rotation, all these things are logical. So
Yeah.
I'm not putting together the evidence that we need to be full on bearish right now. I just saw here, it was popping up here in TradingView's live news for maybe the IWM. It looks like Stanley Druckenmiller just, is now being made heroic again, is loading up on small caps. It's like, I mean, it wasn't that hard. It wasn't that hard. But obviously when you're a, multi-billionaire hedge fund manager, that, these plays matter. But anyway,
Yeah.
JNK is what I'm watching. VIX is what I'm watching. I've got a lot of hedge positions on MES and ES. I've got a lot of hedge positions on SPX and NDX. And all that is some income plays, some hedges. I'll buy more SPY. I'll buy the Qs. I'll buy DIA. I'll buy IWM. I'll own those as ETFs. But right now, I'm just trying to trade a lot of options around them for income.
Gotcha. I'm also wondering, so that big jump we saw in Russell was like similar to gold. So that the gold trade that Nick was in, he's been in since like late June, I believe. So he's doing pretty well right now. But
Yeah,
we saw yesterday's move was how far was that? It was like a 2% move on XAU, and
yep.
the same thing happened with small caps. I think if we're trying to, like, regardless of what's rotating and what's not, the odds of an interest rate cut are so high this year because there's 3. We've got 3 forecasted now. So as much as I don't necessarily think that's a good idea, I think the odds of it happening are high. So instead of looking at should we look to get out of certain indices and get back into others, or look at junk bonds or whatever, gold and Russell are going to do the same thing. I feel like they're both heavily interest rate sensitive. So gold, although it had an amazing run yesterday, I can see it holding or pulling back a little bit, but I'm seeing this could be the new NAS trade where we saw those pullbacks, and every pullback we saw, if you bought, you do well. That's just kind of how I feel about gold right now, just in the next coming months. Just the lower interest rate expectation is the play now, is what I think.
I don't disagree. I think that right now, like sitting at these all-time highs, I just hope this isn't a bull trap on gold, because if this is a bull trap / broadening pattern, I'll say this: if gold comes back to like 2350, then we're still stuck in like an ugly range. But I kind of I like this. I mean, if we're up here and we just pause above, let's say like 2460, 2470, a bull flag on gold. I mean, I don't know. I mean, I'm targeting 3K, man. I mean, if we get to, I've got measure moves on gold all the way up towards, let's look at my, let's talk fibs here for a second. 2800 is a pretty logical spot. If we go 1, 2, 3, and this is 4, 5 waves could get us up into this. There's a nice little confluence here at 28 and 2816. So 2800 is pretty exciting. 3K would be my like capitulation profit target. I love it. I mean, look, gold makes a lot of sense for if it's it's against the dollar, it's a store of value, it's interest rate sensitive, like you said, it's inflation sensitive. All these things are building a lot of good cases and justifications for being long gold. I mean, most portfolios have gold in them. It's just a matter of how heavy you want to get exposure wise. I have gold, I have silver, I have Bitcoin, I have Ethereum. And then Forex, it's like I've still had a very difficult time reading the dollar, as far as every trade on the dollar is not clear. I've got mixes where I'm still long dollar Swiss, I'm still long dollar CAD. I just got stopped out of Euro dollar. I'm still active in New Zealand dollar. Pound dollars kind of rip into the upside. It's like the dollar just hasn't been a good one to read across the basket, but the DXY is still something I'm paying close attention to. But it just, let's fast forward, let's just look at the evidence, right? You go to the watch tool and we're talking about the Fed. out to, and I wish the CME watch tool would take us all the way out to next year. I wish we could go out to like, December of 2025, but we can go out to September, and that's still plenty far. But we're talking about a Fed rate that's going to be around 3.5%. That's 200 basis points lower. Now, what I have to wonder is, and we look at the correlation here of, cutting rates and what the market actually does. So let's think about the last time it's just hard to think like, on the way to cutting rates, the market tends to run, but when we actually cut rates, the market tends to peak. So I just wonder, like, over the next year, okay, as we drop from 5.5% down to 3.5%, I think that's just to kind of stabilize the economy. It's going to be good for real estate. I think just in the last week, I think we saw this yesterday on the show. Maybe it was when Nick and I were on. Home builders, man. DH Horton has it's DHI. DR Horton, yeah. DR Horton is a home builder. Lennar, Pulte. Look at what they did in the last couple of weeks. As soon as we had that CPI news, these home builders ripped to the upside. Interest rate sensitive. Gold is interest rate sensitive. Small caps interest rate sensitive. All these things could be aggressively pricing in interest rate changes. And whether they're sustained or not, we're about to find out. But I still like the upside on the Russell. I would not be upset if the VIX, has an event to cause us to rip up here towards 18, 19, 20 and just give us something outside of super low volatility. It is very difficult to, unless you're just buying every dip, it's very difficult to have, lots of options premium. And it's the same old strategy when something just sideways for months and months and months. It's like, what causes that? What causes that? Getting up to 20 here on the VIX isn't impossible. I was thinking like, yeah, there's enough maybe wild and crazy news out there today that, maybe if Trump really talks about Taiwan and I don't know, kicks the dragon a little bit where it's like, are we trying to initiate a trade war here with China right now? Is this the time to do it? So I don't know, man. There's, as always, it's like things are going well. I've got a new watermark high today in the portfolio, which is great, but I'm not comfortable. This isn't just like, oh, this is easy. Just do this and hang on and just let your profits roll in. I am actively positioning for anything can happen to derail these profits. So yeah. I want to keep generating some income in the interim. I want to keep letting positions drift higher, but not for a second do I believe that this is a full-on just everything's going to rally. This is the easiest market. If it is, cool. It's as they say, plan for the best, prepare for the worst. That's what I'm doing.
We're just in such a weird environment now where we've been uncomfortable for several months. And, it's like holding on for dear life. You don't know when things are going to crack, but
yeah,
that's what's making this so hard. It's also why I don't really want to trade earnings season either yet, because I'm not sure what is really going to happen. I don't know if there's going to be a lot of volatility or none. And I don't know if it's going to affect anything necessarily, or I don't know if it's going to crack what's so overextended and so overvalued. Because the banks are a big one. They're very boring in general, but if they're doing poor, then, it's very much not a good sign. So,
well, Morgan Stanley still sitting near highs. JPM is sitting at highs. Citigroup is sitting at highs. Give me some other ones. Wells Fargo, Bank of America. Didn't they all have earnings this week? Bank of America are sitting at highs. I mean, that's not a bad thing, right? So banks sitting at highs, definitely not a bad thing. Look at that friggin' Bank of America, dude. Gosh, 25 to 44. Little old Bank of America. Not like I didn't have a support line drawn on my chart. You dummy. Why did I not take that trade? Anyway, Wells Fargo. Kind of came back from a nice support level of 56. So, right now from what we had for the week of earnings, banks are sitting near highs. So I'm not sure if their guidance was was negative, but based on the price action, I would say that they're beating top and bottom expectations. They're probably excited that the rate cuts are coming as well. That helps boost a lot of things. So having the banks roll out in what looks to be a positive price action side is good, but also the earnings expectations are pretty rich, and I do think that earnings season is going to have to do a lot to deliver on those. I think one thing we might see, and this is why, and call it a hunch, call it a little intuition, which is not something you should trade, but this is why I'm willing to take way less risk during this earnings season than I typically do. Right? This earnings season, if the market expects so much out of these stocks and so much out of these earnings, if we just deliver as expected, does that mean that we have blow off moves like it blows through the highs? Or I don't think of it just delivers on expectations.
I think just because of how high things are, that increases the bar. That
it has to be
are much higher. Yeah,
it has to be a perfect earnings season, and that's very difficult. Yeah,
and it's not even earnings reports really. It's not like what they report. It's their guidance too. So one thing can miss. It can be a beat on earnings, but a small miss on revenue, and that could tumble a stock, or it can beat on all fronts and then revise lower for the next quarter, and that could kill the stock.
Yep.
So there's too much that can go wrong, and that's what makes it so uncomfortable right now. But we have
isn't that fun? Isn't that fun being uncomfortable every day?
No, it's just like, I guess I'm learning,
This is why I said trading options helps, because you can cap the upside and the downside. Like it's the trade-off. There's no such thing as just like unlimited profit potential unless you're taking risk on, or unless you're lowering probabilities. But the nice thing about options is you can take a lot of trades, define your risk, and have the peace of mind of, I know what that trade is. I know what that trade does. I know what that trade has to do. And so when I look at my portfolio and spot check this, I'll just go through the whole thing. I mean, if I look at this from top down, okay, I'm long oil. I'm long, this is the E-mini futures S&P. I'm long gold. I'm long micro E-minis. I'm long Russell. I'm long silver. I'm long silver. I'm long Apple, Amazon. But like when I say long, it's like that's my directional play, but I don't own these stocks. If they just stay where they are, I'm fine. If they go down a little, I'm fine. If they go up a little, I'm fine. If they go up a lot, I'm fine. So the one thing I think would be frustrating this year would be a trader that's trying to generate income on strangles. If you're trying to guess the top, guess the top, guess the top, strangle, 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 these markets have moved up enough that those call sides get tested a lot. So, I mean, the one thing that hasn't performed, like right now, it's like, okay, I'm P&L positive on the day, another new watermark high, which is fine. But the one thing that hasn't played out this year for me yet, and I say yet because I'm hoping this is ultimately going to catch up, is China. And I keep going back to this, like, and I'm not trying to convince anybody that China's a good play. But with options and some light exposure, I still think that a couple of very fundamentally strong cash healthy companies like Baidu and Alibaba, based on a bullish pattern. I mean, this might take time to play out, but to me, this is either the setting up of a head and shoulders where this is going to be like where the right shoulder forms and this thing's going to rip up to this neckline, and we're talking about managing the move even higher, or this is going to be the sideways garbage that gets us down to settle into a double bottom, and then this thing comes all the way back up to the range high. But if I looked at this as a move up to the neckline or a double bottom to this level, and then we measure that move higher, what am I looking for with any good trade? A lot of upside potential. If I have the room to trade something and I have time to trade something, I don't have to be 100% accurate with this. I can be right and generate a lot of money there, as can everybody else. But, it's a good technical read. Yeah. Am I nervous about a Trump presidency with relations with China? I think so. Just like we could have been in 2020 with relations with Russia. It's like, I don't know if we're going to a trade war. I don't know if this is more extreme and more, in-house, everything's in the US, we're selfish. I don't know. I do feel like we're about to go into another phase of deglobalization. That's what I think. That's another thing that could, I mean, geopolitical risks that have been bubbling under the surface could end up being a big reason that the market all of a sudden stalls, all of a sudden corrects, all of a sudden we get into something a little bit uglier, and this uncomfortable or this discomfort that we're seeing can all of a sudden materialize in a big way. So again, there's always trade-offs, and I think the market's designed to keep us a little bit uncomfortable. But that's what trading is for. Like, you have the ability to position long, position short. You have the ability to hedge. You're going to be uncomfortable because, look, if it was freaking easy, then everybody would do it, and we'd all be millionaire traders. But
Yeah,
it's
I
not
like
because
I
there's
like
money in
the
motion.
idea of options when things are kind of like this, where things are uncomfortable.
For sure.
But I would like to have more money just owning stocks at some point, but that would have to be after some sort of correction. If we can, the bigger the correction, the better for me and for young
Yeah,
investors because they can get in, build their positions, hold things at levels that they haven't seen in decades.
agree.
So right now, options is fine because you don't have to hold on to anything.
That's
But
true.
we are 5 minutes over, and Nick Phillips is waiting to get on, and
Okay.
we've been
Well, I'm
keeping
sorry.
him.
Okay.
But
Well, yeah. Let's put a pin in this. We'll carry on this conversation later. Yeah. Let's pick up this. If you come in and join me for another segment, Frank, I'd like to talk more about what levels would you like to see for these big dips you're talking about. I mean, I
sure.
certainly have some big ones picked out. Let's spend some time on kind of the big picture levels tomorrow. Other than just having to buy these all time highs at 1% dips at best. So anyway,
Yeah.
we'll chat about that soon.
Okay. We'll do.
Okay.
All right. Well, I guess I'll talk to you tomorrow, and
Okay. Sounds good. And
we'll figure
Nick
this
Phillips,
out.
sorry for running over. We'll see you guys later. Thanks.
Sure. Thank you.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
What is going on, everybody? I was just tuning into Chris and Frank there. Lots of good stuff. Honestly, I was like, I know it's my time, but I was learning a bit there. So very cool hearing those guys talk. As always, for my segment today, if you guys want me to go over anything, review any charts or any fundamental data, drop it in the chat and I will try my best to get to your request. So taking a look at the dollar today, we're continuing this downside move. This is the area that I was mentioning yesterday, the 104 area, that if we drop down below this level, I'm very surprised that we're doing this week already. I would almost anticipate us needing more data to break down below this level. That has not been the case. We're, theoretically, CPI momentum continuing to pull this to the downside. Now, whether or not it's going to continue down from here is anybody's guess. Like I said, my anticipation is going to be something like this until we get more data, which obviously this is way too far spread out. So it's really going to be more like this. We'll have new data next week. And if that data is in line with a dovish tone, we should see continuations of a dollar sell-off. And again, for me, I'm aiming for areas of major support. So this 103 level, it's got some pretty strong areas of previous support. Below that, we're going to probably go 102.5. And then obviously 102 would be the next major psychological level. Let's see. Tom allows it. Can we get a quick overview on USD JPY? Yeah, no problem. So for me, again, my stance on the dollar at this point in the game is bearish. I think with the Fed's pricing, or with the pricing in of the federal interest rate, don't know why I'm glitching right now. We have increased to, I believe, about 96% priced in, almost 97% priced in for a cut in September. So with that in mind, I don't see a ton of room for dollar upside unless we get surprise data. So moving over to, let's go USD JPY for Locust. I guess that would be how you would say your name. Sorry if I butchered it. Let's see. All right. So on a fundamental basis, I like this to the downside. Now, you guys also have to know I've been looking for this to the downside since like February of this year. So where were we at? We were at these previous highs back here in February, and I was looking for this to sell off from there. Didn't end up happening. Obviously, we had inflation numbers coming out to the upside this year, with a lot of sticky inflation in the US, kind of made this downside move not happen. Combine that with the fact that even though Japan raised rates and they've been doing everything they can to sound more hawkish, yen was just incredibly weak for the last few months. So now potentially this may be where we start to get a significant bit of pullback in UJ. And by significant, I mean, I'll be aiming for these areas that we were trading at the beginning of this year. And then beyond that, lower than that, to where I was targeting prior to this bullish run to the upside. So, we're talking 104 levels, 140 levels, not 104, sorry, 140 levels, 145 levels, and obviously before that one right at 150. We've had a massive push to the downside over the last couple days here. So starting last week, we may do something like this. I could see something like this happening when we hang out here, a little bit of a pullback, maybe something like that, little head and shoulders price action. On a lower time frame, dropping down from the daily to the 4 hour. Again, it's just, for me, it gets really simple when you have market structure like this. If price comes back into this area and fundamental biases stay the same, price comes into here, this is a good area to start selling off with stops above this area here. Just my opinion, because at that point you're playing the simplest market structure that there is. Support and resistance. This is a high that made a low, that made a lower high, that made a lower low, that made a lower high, that made a lower low. We make a lower high and make a lower, then we are getting involved in the trend. Let's see. As far as if it's going to do any more today, that's anybody's guess. Like, as far as if it's going to continue south, we've pretty much just been consolidating all of New York session on this pair. New York kicked off right here, and we're here. We have not moved outside of this little range. So no real solid direction as of New York session today. All of this volume coming in over pre-London and London. So for me, as far as today goes, I don't know. Today may be kind of shot, as far as we've already moved pretty heavy to one side. It's been consolidating for the past 3 hours. I don't want to trade this to the upside, but I'm also not willing to get in on anything to the downside right now unless I'm scalping something really small time frames, like 30-second out of some major areas, but again, not super interested. Maybe if it comes back up into this area here at 10 or 156.8, 156.75 to 0.8, I may try to scalp, a couple sell positions out of here. For me, it's going to be, I'll be scalping buy positions on Japanese yen futures. It's the exact same thing. It's just an inverted chart. So that's my idea for UJ. Analysis on Euro USD. Please do analysis on Euro USD. Every trader seems afraid to speak on it. I don't know anybody that's afraid to speak on it. I wonder why. I wonder what you're seeing that is telling you everybody's afraid to speak on it. Let me remove these drawings. I'll just check this out from kind of a macro level on down. Okay. Truthfully, I have not been paying too much attention to what has been going on with Europe fundamentally. So I can't bring a real solid fundamental bias to this pair right now. I'm looking at Euro FX futures. This is the exact same thing as Euro USD. Just so there's no confusion on it. It's the exact same chart. I'm going to go back to this now. We are at some previous highs here from back in March. But again, I'm biased towards dollar downside, and to some degree, you would think that would immediately indicate Euro USD upside. It doesn't necessarily, but I think some of this move is due to dollar weakness. Now, I can't confirm that 110% because, like I said, I have not done a recent check-in with Euro fundamentals. I haven't been trading the Euro much at all. So as far as, everybody being scared to speak on it, I don't really know what that's about. I would expect continued upside move simply from a dollar weakness standpoint, but not something that I'm willing to get in or place any money on. Now, again, I'm a very simplistic support and resistance trader with fundamental bias behind my ideas. So let's say that I had some fundamental bias for Euro strength this morning. This would be exactly where I would be looking to get in. It would be even better if price did something like this and dipped down into here, kind of swept some of these stops, did a liquidity sweep, as much as I hate that phraseology, and then pushes back up into here, does a little bit of an inside retest, and then continues to the upside. This would be my ideal entry at that point. An entry from here with just this price action would need to be like incredibly reduced risk. Again, not investment advice, but just something that I'm saying, if I had a fundamental bias for upside in Euro, this would be an area that I would look to buy from. I tend to look to buy from areas of support, previous support where price bounced off of heavily, again, with a fundamental bias in mind. All right. Gold is bleeding. Let's see. Yeah, down on the day so far, but bleeding's a little over dramatic, I would say. Obviously we are having a big push to the downside, but I don't know if I would consider this bleeding yet. We need to really break down below some of these previous lows, come back inside this range first of all, then break a low, break another low, break another low, and then I would consider that bleeding. Once we break down past some of these lows, and even better, breaking down below this low here, I would consider that bleeding for sure. But as of right now, I guess if you're looking at it on tiny, like micro time frames, anything lower than the 5 minute, yeah, it's absolutely having a massive move to the downside right now. Yeah, no problem, under trader. Again, there's nothing on the calendar for today. We had some Fed speaks, so Barkin, I think it was Waller this morning at 9:35. The Fed is getting closer to the time when cut and policy rate is warranted. The time to cut policy rate is getting closer based on analysis of potential scenarios. So let's go look at this 9:35 and let's go see exactly what happened in Doxy and the gold at 9:35 and the gold and gold at 9:35. We'll go to the 1 minute here. $9.35 headline hits the market, had a brief rally in gold. This would be off the dollar weakness that comes in from Waller saying rate cuts are getting closer. The idea is getting more solid. And then you see the exact same thing play out here. 9:35 is where chart opened at this time. And we have a little bit of bullet or bearish price action out of the Doxy, quickly recovered. And obviously his comments were not enough to continue to push the dollar to the downside this morning. It's kind of like almost like he said something that the market already knows, right? Anybody can see that we are pricing in for rate cuts. Euro USD is the worst pair out there. You can't swing trade it. It all depends on the fundamentals. It all depends on the fundamentals and the technicals, but for the most part, the fundamentals. Slugmeister said Euro USD is the worst pair out there. You can't swing trade it. It's not entirely true. There's going to be times where that swing trade is open all day long. Now, has it been open in recent history? If you look at, depending on, how long you're trying to swing, it's been stuck in a weekly range since January of 2023. So going on a year and a half, most of that range activity inside this inside line here. But since January of 2023, you're right. You haven't been able to, at least not on a weekly time frame, been able to really get much swing activity out of this. Now it's just a matter of where is this going from here? In my estimation, maybe up, but also maybe still consolidating depending on how closely aligned the euro and the US monetary policy remains. If we get a divergence, if the US starts to cut and euro starts to hike, well then we're very much in for a bullish ride here. Vice versa, euro starts to cut and the US starts to hike, very different scenario. Euro USD to the downside all day long. Used to be the most tradable pair, and lately no one trades it. That's what I meant by afraid to speak on it. I don't see much channels talk on it. Yeah, it's one of the things that I've been in the Forex space since 2017. I've been in the future space now for about 7 months. When it comes to currencies and the most traded currencies, like, once upon a time, everybody was trading UJ, but that's because, in my opinion, the influencers on Instagram were like, oh, UJ got me this Lambo. And so everybody's trying to trade UJ. And then those traders switch up and trade XRP, Ripple USD for a while, or gold USD for a while. And they're like, gold got me this, Rolex. I'm trading what's something else that was really popular? GJ. GJ is like, oh, GJ got me my house. Like, it's like cool, but that's not really like, I think picking reasons to trade certain currencies based on the popularity with online traders, you need some volume in whatever you're trading, absolutely, but that's not a good methodology for picking the assets that you want to speculate in. So a better philosophy, in my opinion, a better approach to picking your pair is to be open to all pairs. People say trade one pair and get to know one pair. I say it like this. You should have 1 to 2 currency pairs that you follow really closely. You follow, and by follow, I mean follow their fundamentals, understand what's going on with their price action. You know what is happening. Let's take UJ, for example. You know at all times what is happening on that chart, as well as what's happening with the Federal Reserve, as well as what's happening with the Bank of Japan, as well as what's happening with all of the economic data for both countries and any geopolitical events that are occurring in those countries. You know UJ both technically and fundamentally. It does not mean that there's always going to be an opportunity on UJ just because you know the fundamentals and you know the technicals, right? In fact, it may mean that you know you need to avoid UJ for the time being because you understand what's going on in that environment. However, the methodology that I recommend for choosing assets, whether that's picking UJ to trade today, odd USD, CHF USD, choosing gold, choosing to trade NASDAQ, choosing to trade ES, is there are, we'll take currencies, for example, just to keep it a little simple. You're going to want to trade a strong currency against a weak currency, fundamentally. So something that you could do on a technical basis to get an idea of what's strong and what's weak is create a currency strength chart just like this. And then you want to line up. You see this vertical line I have over here on the far side of my chart? This marks the start of the new daily candle, excuse me. So you line that up to the edge, and then you can see on the day what the strongest and weakest currencies are. So CAD JPY right now might be a phenomenal trade to the downside. I haven't looked at this. I actually don't trade like Forex pairs, traditional Forex pairs anymore. I'll explain that in a second. Sure enough, CAD JPY is a monster to the downside today. Maybe the biggest mover of the entire session. That's trading a weak currency. It's the weakest currency on the day versus a strong currency, right? And I don't tend to get that bias from this chart. I tend to get that bias from fundamentals. Something happens like we get a really weak CPI print out of the US. And then let's just pretend, because I don't have a real great example of this in recent history, let's pretend that we had an incredible, you know what, I'll say this. Last week, we had CPI out of the US, which was incredibly weak. And we had Japanese yen currency intervention efforts on the behalf of Japan. So they're not going to intervene to make their currency weaker, right? So what are they doing? They're intervening to prop up the strength of their currency. So you have some strength coming in via intervention methods, and you have weakness in the dollar via deflationary scenario out of CPI. Weak dollar, strong yen, sell UJ all day. Buy Japanese yen futures. That was one of my trades. I believe it was last week. It was either last week or earlier this week. It's either Monday or Friday. I took Japanese yen futures to the upside. Real simple. It might have been Friday. I can't remember. Regardless, the idea is pick a strong and weak currency, be open to all the currencies, Don't let this idea from a lot of, Forex influencers that you need to marry one pair, like be married to one pair. If I was married to one pair, there's only so many opportunities that exist with one pair. You can look at any chart and say, yeah, price is moving all the time. There's always opportunities, but the highest probability opportunities exist across a range of assets. For me, I don't trade it. I don't trade nearly as many assets as I would like to. Um, there's a little bit of nuance there. I like what I do. I like the amount of assets that I focus on. I wish I had the bandwidth to focus on more, to be able to look at, like let's say right now I look at all these currencies: 1, 2, 3, 4, 5, 6, 7. I look at gold 8. I look at NASDAQ 9 and S&P 500 10. Maybe I consider a couple other things, but like 10 to 15 assets is what I look at. And it's enough to keep me busy. Like I'm researching and reading all day long. I go through bank research reports. I'm, constantly cycling through these reports. Excuse me. If I only was trading one currency pair, there's only so much information for two central banks. So once I know everything that's happened there, once those biases get baked into the market, it's difficult. You limit your opportunities when you only focus on one pair. So the whole I only trade Euro USD, I only trade USD JPY, I only trade GJ, I only trade gold, I only trade, like that whole idea. I think it sounds good in influencer circles, and it sounds good to people that see the complexity of trading and they go, oh, that makes sense. But if, in my opinion, I've never been to one, but if you were to go to any trading floor in any of the major cities and tell them, oh, I only trade Euro USD, they're going to laugh at you. I think it's a silly idea. I could be wrong, but I'm pretty sure there's not many major financial institutions that only focus on one asset, right? What is that chart? This chart right here. CC, I moved to futures, then back to Forex, and now do both. The liquidity of Forex cannot be on higher time frames. Yeah, so the reason why I don't trade Forex anymore, I still have money in a CFD account, but as a US based trader, the lack of regulation for CFDs is kind of whack. The way that I trade, I tend to scalp. So the spread and the price per trade makes scalping pretty difficult in Forex, whereas in futures, it's much simpler. Is there a website that gives detailed analysis on fundamentals in the form of a blog or something? So shameless plug, that's what I do in my private group. I give detailed analysis on fundamentals constantly throughout the week. We do live calls, pretty much every red folder news event, not everyone, but all the ones that have historically given good tradable opportunities. That's across all the currencies. I'm always available to answer questions. I have a course on fundamentals, and but as far as just a single website that gives the detailed analysis on fundamentals in the form of a blog or something, I mean, I know A1 has their EdgeFinder, which is a pretty good tool. You get a lot of the fundamental data from there. Other than that, it's just keeping up with news sources and or joining some kind of commentary group like I have that keeps up with things and lets you know the state of things kind of on a consistent basis. The problem is I work a full-time job. It's kind of tricky to keep up with like more than 2 to 3 pairs, I guess. Oh yeah, I totally understand it. I've been there. I'll say this, Undertrader. I think this is my analogy for what it took for me to take hold of fundamentals in trading, because I only just started incorporating fundamentals into my trading last year. It's been a year since I started incorporating fundamentals. So I'm a fundamentals newbie. Been in the market since 2017, but fundamentals since 2023. So just know that going into this little bit, like I'm very fresh into that process. And this is what it took for me to go from knowing absolutely nothing to being able to hold my own in conversations when it comes to fundamentals. And beyond that, being able to actually teach this stuff. I took a hold of fundamentals the way that people pay attention to their favorite sports teams. I'm an athlete. I played soccer growing up. I still, get out, exercise, work out. I'd love to play pickup soccer whenever I can. But I've never been one to like spend a ton of time watching sports, keeping up with all the stats, paying attention to who the players are, caring, about their new jerseys and blah, blah, blah. Like, it's cool when I see it come across my feed, I'll look at it, blah, blah, blah. But I don't obsess over it the way that a lot of sports fans do. I obsess over central bank information. I obsess over the fundamentals of trading like it's sports, right? So that's what I would say it took for me, and what I think it takes for people to really get a good grasp quickly of fundamentals is to start following this stuff the way you follow your favorite sports team. So just to be crass, you're on the toilet once a day at least, instead of scrolling through Facebook, get on Instagram or get on Twitter, find a feed that is all Forex news or stock market news or any kind of macro news. Read through that. Read through financialjuice.com. They have, that's just this website right here. Read through these headlines. Start to try to, some of these have little links like this. You can click out of here and go read full articles. Go to forexlive.com and just start immersing yourself in the articles of what's going on. Another good way for under traders specifically, or anybody that's working a full-time job, anchor your trading. How can I say this? Your anchor point for fundamental information and keeping a hold of it is going to be economic data. So, and monetary policy, but we're going to fold monetary policy into economic data. So let's take the US dollar, for example. Today, you can go back and look at what happened with the most recent pieces of economic data, CPI, NFP, what else was before that? PMIs. You can go back and look at those and see what those prints did for the economy. Go back through Forex Live, read through some of the most recent US updates, just get a general idea of what's happening fundamentally in the US. And then that's only going to change so much over the course of the coming days and weeks, right? So you have this element of fundamentals that could happen where something insane happens in the world. All of a sudden, China and the US are at war. That happens right now. That's going to change things fundamentally. Absolutely. The markets are going to react to that. And that has the potential to happen any given day, right? But aside from that, you have anchor points that you can point to. Okay, so I know for me, my next major US piece of data is going to be PMIs next Wednesday, flash PMIs, and then PCE next Friday. So aside from Fed speakers making little comments about what they think about the economy, I know not much else should theoretically change outside of potential geopolitical events happening with the US dollar. So my bias is baked in right now on a weaker dollar. I am going to be only looking for US dollar sells. That's the only opportunity I'm interested in currently. So we could see the dollar, rally back up to the upside over the course of the next few days. This thing could just hang out here for a day, 2 days, pull back into here, do a little bit of a relief rally from this, this major drop off. It might need to breathe a little bit, come back into some of these areas. And before, let's say we get continued data next week that gives us continued dollar weakness, then it drops off from these areas. So it's sort of just about, even if you work a full-time job, incorporate keeping up with things the way that you would keep up with your favorite sports team, if that analysis makes any sense to you. If you're not an athlete, maybe I need to come up with another analogy, but USD CAD, what is my analysis? Again, my initial thought process is downside because of dollar weakness that I'm pricing into the market. But it's kind of like, from where? Well, if today closes down here and we get that evening star pattern, UCAD could sell off from here. Excuse me. Lower time frame wise, 2-hour time frame, we're on a bit of an uptick here. It's just a matter of how far is it going to go. I could see a couple things playing out. I could see one option, we come back up into here and retest these highs and fail from these highs. 2, we come back up into this area, reject, and fail from here, maybe along the way doing a little retest to go to the downside. I don't see this trading much higher than this level right here, 1.3775. And I wouldn't anticipate it passing 1.375. But as far as if it's going to go there today, it's anybody's guess. USD CAD buy, you think we're in for USD CAD buys? I mean, I guess if you're looking at, smaller time frame scalps, yeah, you could be right. Again, though, I'm not interested in buying the US dollar up against anything right now. Zero interest in that. USD CHF. Very similar situation. I'm not interested in buying this up. Again, you could be in for a scalp, but look at this currency strength chart. CHF is incredibly strong, whereas US dollar is incredibly weak. So why would I want to be buying USD CHF right now? I wouldn't. The dollar is incredibly weak and the Swiss is incredibly strong. So that is the perfect recipe for downside move in USD CHF. Now, again, on a micro scale, if you're looking at it in here, if you're starting to buy in here and you're just scalping, yeah, you could probably scalp maybe to here. It might even pull back up into here. You don't know. But for me, I'm not interested in being involved in any dollar pairs to the upside. I'd rather let the dollar pair upside moves play out, hit certain areas of consolidation and resistance, and then look for reversal signs in this area to get in on sells to the downside. Just a looming bear over the US dollar right now. All right, let's see. All right, guys. I think that's gonna be it for today. If you guys have any questions, feel free to hit me up on my Instagram. Oh, before I get off, I do want to share this with you guys. I have started this little blog here. It's completely for free. I may add a paid section for, private members, but that's a whole other thing. But yeah, so I started last week with this CPI follow-up article. Pretty good little write-up on just my opinion on CPI and kind of how it played into the market. And then yesterday I dropped this almost 72 hours since the assassination attempt of Donald Trump. Now, this is where, this kind of reading is good reading for people that want to get an understanding of fundamentals, or even just have a perspective. That's one of the big things about fundamentals that separates it from technicals. Is fundamentals is really an amalgamation of a bunch of things, and a lot of it is opinion based ideas of how certain pieces of data that are hitting from the real world could affect the markets, right? Link. Okay, so yes, hopefully they're okay with me sharing this. Let me see. Official Nick Phillips.substack.com. Wonder if that can post. Yeah, so I'll be updating blogs in there, not on like a real set schedule. It's kind of just going to be once a week minimum, maybe 3 or 4 times a week. We'll see. But all right, guys, if you have any questions, feel free to hit me up. And I think that's it for the day from all of us here at A1 Trading. Thank you for being here, and we will see you guys next time.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.